Hello everyone, in this lecture we're going to discuss on the common dilemma. Indicators, support resistance, chart patterns. This is the most common dilemma that everyone has with a trading experience of a month, 1 month till 3 years and even more than that. Whether you should use indicators, whether you should use support resistance, whether you use chart patterns. Most of the time traders call these chart patterns and support resistance as price action, but this is not correct. The price action or the techniques that we're going to learn today or in this particular course, this is price action. So in this course we're not going to learn indicators. In this course we're not going to learn support resistance, and also we're not going to learn on chart patterns. What we're going to learn, we're going to learn how to read price. That's it. Okay, now the common mistakes. First, they want to earn X amount or X percentage daily. Let's say if someone is having 5 lakhs of capital, they expect to earn at least 5 to 10% each and every day, and they calculate a lump sum amount, and which is not ideally feasible. Earning an amount daily, this particular approach is very wrong. After we learn all the concepts and we make our trading decisions, mostly we trade on higher time frames. When we trade into the markets, mostly we are going to get 2 to 3 trades in a month, and this is going to make, and you are going to make multifold returns, which means you are going to make at least 300 to 400 percentage of your capital, deployed capital, every time you take the trades, or most of the time. So you should get rid of things like you need to earn daily or some percentage daily. Rather, you should focus on accuracy, and also you should focus on the number of trades that you're going to take. The lesser, the better. Second mistake is to identify yourself as an intraday, swing, or positional trader. Most of the traders identify themselves as intraday. Few traders identify themselves as a swing trader, and few identify themselves as positional traders, which is very wrong. It depends on the market, it depends on the time frame, it depends how the market is giving you an opportunity to make money. It doesn't depend on you to choose whether you are an intraday, swing, or position trader. If you get a good trading opportunity which can make a good income out of that particular trade, and if you get that in a higher time frame, it means you're going to keep that for a week or a month. In that case, you're going to make a positional or a swing trade. If you get an opportunity in a lower time frame and you want to make use of some momentum that market has gotten, at that time you should take a trade on an intraday basis. Okay, and the third, with the limited returns. Do not calculate, let's say if you have a capital of 50,000 rupees, do not calculate that you are going to earn 10% per month, that is 5,000 per month, and that is sufficient for you. Or do not calculate that if you have 50,000 rupees, you are going to earn 1 lakhs per month, that is 200% of your capital. Predicting the outcome of a particular trade in terms of percentage is very wrong. It depends on the market, because once you set a target for yourself, it gets very difficult for you to concentrate on reading the price, and you are going to concentrate only on how to make 100% of your or 200% or X percentage of money in that particular month. Rather, you should focus only on accuracy. Even if you take one trade in a month, that should be sufficient to earn a living from trading, and that is how your approach should be. Okay, thank you.